All right, guys, what's going on? How you doing, Ricky, KB, Gervish, Steve-O, Guggen, Mohammed, Andrew, another Andrew, and Carlos? What's going on, guys? Been a while since I've done one of these. I've been busy lately. Bear with me a little bit. We'll just get right into it here. Most important chart in the market right now, in my opinion, DXY. Watch the US dollar. It's absolutely ruining everything. Yes, Ricky. Wait, what? It says I'm live. Can you guys hear me? Give me 1 second. I'll message on. Yeah, I'm on live. Everyone's seeing you. Call me. Just wait. Give me a second. Yo, can you guys see me? Can you message in Discord? Ricky saying no one can see me. Okay, thanks, Dougal. All right, so we'll just keep going. Ricky, going crazy. Thank you, guys. Let's go into the dollar here. Dollar is at 111. Quite a big pullback from last week where we at the 114s, 115s. Most important right here, just simple trend lines. It's a very clear uptrend on the dollar. We did test the lows here. As you guys see, we retested the lows in April, kept going up, retested the lows in May. And if you guys go on SPX or SPY, you can see the chart is exactly inverse to the dollar. What I mean by that is when we pulled back here from May 12, let's say May 13th, all the way to May 26th, we'll open up a chart here. You got the SPX daily. May 13th to July, what did I say, May 13th to May 26th or something? Yeah, so you got May 12th right here. You see this big run when the dollar started pulling back to the trend line here. May 12th, May 13th, we pulled back all the way to the 26th. Right here, we did get a small run, dipped it back a little bit, and then we ripped again. So usually, whenever the dollar pulls back to this trend line is when we get a rally. You guys can see it here as well from July all the way to August 12th. Same thing on SPX from July about here, right at the bottom almost, and then we went on that huge run until August 16th, and that's when the dollar bounced as well from that trend line. So keep an eye on the dollar. It's very correlated right now to the SPX. According to just a simple trend line that I drew right here, you can see the dollar has a little bit more room down, maybe to the 109 level. That also matches the 50-day moving average, if you guys see here. It's around 108.88. So if we do get a little bit more of a pullback here, look for stocks to top out when the dollar hits that trend line or the 50-day moving average at 108.88. So that's one thing to watch. Another thing to watch is bonds are very, very behind equities right now. So usually when the stock market bounces, bonds also get some flows in there. People start buying everything with both hands. Right now, UB is just bear flagging on the daily. Hasn't broke out up, hasn't broke out down. But as you guys see back here, we had a huge bear flag during the last rally in the stock market. Instead of just ripping up like the market did, bonds just kind of bear flagged on the daily and then eventually broke it down and you came down here. So are we going to do the same thing here? Are we going to form a bear flag on UB? And as soon as it breaks out to the bottom side, that's when equities are going to roll over as well. So keep an eye on that little bear flag forming on UB. If we do start breaking down, there's a high chance that stocks also go down with it. Another thing I want to go into, I'm very, very bullish on commodities right now, guys, because the Fed is screwed. Yeah, great day, Turkey. Great day, G-Money. Thank you, Hiba. Carlos, thank you. And right now, I'm very bullish commodities. The reason being the Fed is completely screwed. If they don't stop hiking rates, something will break for sure. It's not if, it's a when. If they do stop hiking rates, inflation will go insane. We'll have hyperinflation. We'll have CPI prints of over 15-20%. What that tells me is, first of all, oil is being manipulated right now. Russia and Saudi Arabia have joined forces. You've seen the OPEC news. Everyone's seen it by now. We are very short on oil in the short term. US has already almost emptied their strategic reserves. Those need to be filled up ASAP. We're not going to be able to go to renewable or green energy for a long time. That's just a pipe dream. It's not going to happen. You've seen Germany tried it. Now they're completely screwed. Their inflation's over 10%. And that's just the number they give. The real number is much higher than 10%. And that's what makes me very bullish on commodities as a whole. In particular, I'm very bullish on anything to do with nuclear energy because they're going to need to start ramping that up in any case. Those four names I'm watching is CCJ, UUUU, DNN, and UEC. These are four of my favorite uranium names. And I don't think I think a long in any one of these names will pay very well over the next 12 months, even longer. BTU is a coal one. As you guys seen the news yesterday, I posted coal shortage in the US. This one's going to keep going up in my opinion. And lithium also for the electric cars. Sorry, I have a bit of a cold. Just bear with me a little bit. Other than that, uranium very bullish. Oil very, very bullish. I still have my Oxy equity and my PBR equity. And I'm waiting to add if we do get another dip here. There is, you guys seen the trade of the week. I already posted all the Oxy charts. The weekly is kind of bull flagging here, but we do have a very nice support touch last week, which was surely a buy at 57. Now we're sitting at 67. Warren Buffett's buying the whole thing. He's going to take over the company soon. Tax purposes, whatever purposes, he's still not going to buy a company that he doesn't like that, will go up apparently. So you see Oxy here, one of my favorites. PBR pays a huge dividend. There is Brazilian elections and politics at play here in this one, but the dividend's too big for me to ignore, and I have a ton of this one. Dividends pay very nice, and it's right back above 14. So you guys see this little weekly time. All these oil charts are forming the same thing. They have this weekly little uptrend going. Every time it comes down, test supports, then pops. Test supports, then pops. Test support higher than last time. So this time, hit the trend line. I'm expecting over $16 this time. Unless politics come into play. Other than that, what else is there to even go over? I did start a couple of puts yesterday. I looked at, let's talk about SPX here. All my other charts are just mangled with lines. Here is SPX. So going into yesterday was the second day straight up. Let's go to the other one. Going into yesterday was the second day straight up of SPX. As you guys see, we bottomed overnight on Sunday at the 200-day weekly moving average on ES. That's where we bottomed. And then we ripped straight up in a line. This is an hourly chart, guys. So you guys see this? Straight from 3560-ish all the way to 3800 in a straight line. It was very obvious the RSI was too hot. Turkey nailed puts overnight. I did call out some November puts just in case they want to roll this right back over. As you guys seen in the past, if you look at a 4-hour chart, if you look at a daily chart, a lot of these previous rallies, we got oversold on the RSI. They popped it for 2 days or 1 day even. None of these rallies even lasted longer than a day. And then by the third day, we were already retesting the lows. So if in case they decided to do that, which they did not, obviously, you guys seen 2 days straight up this morning. We got a huge dip and then they bought the dip up, which is very bullish, by the way. It's called a fake breakdown. Other than that, right now, where are we? This is a very bullish setup. I'm not going to lie. I do have some November puts. I took starters in AMD and LQD. The reason being AMD paid me the best last time. Chips puts usually pay the most. So I chose AMD again. Last time I paid like 400, 500%. They went from 1 to like 6 or something. I sold a little bit early, but it is what it is. And same story on AMD. This whole leg down, we have not been able to get over the daily 8-day moving average ever since before September. So every time we would bounce, 1 day close above the 8-day, then roll right over. You guys see right here as well. Back rally to the 8-day moving average, roll over. Rally to the 8-day moving average, roll over. And right again, we closed yesterday above the 8-day moving average. I took some puts based on the same reaction as this right here. Second day above, third day, big dump. Right here, big rejection, 8-day moving average, big dump the next day. So let's see if we roll over tomorrow. If we do not roll over tomorrow, then it's probably bullish. We probably get another leg up and we'll readjust. I'll probably add some more at the 21-day moving average. That's where the last bounce went. As you guys see here, we went all the way to 21-day moving average. As soon as the 8 crossed underneath the 21, this has been in a bearish downtrend, and that's exactly what it's continuing to do. Until it proves otherwise, I'm very bearish on it still. LQD is a play on those European banks, Credit Suisse. You guys seen all the bankruptcy rumors, all that kind of stuff. Other than that, we can go over some ES. I'll go over the trade I did at the end of the day. Just give you a little example. The thing with ES and futures is it's a completely different ball game. First of all, we don't have premium burn. I'll go to ES2 because my lines are all over the place. Well, I'll show you my resistances. I showed you guys the resistance and support. I sent you pre-market. What is happening here? So I sent you all the levels on ES pre-market. Told you guys I would short if we got to 38.20. We got to 38.20 right at the end of the day there. Called out my short. That was the exact top tick right there. So the thing is, in a bear market, I'd rather short resistances than chase longs. So even if we are squeezing, it's very hard for me to jump in along here, let's say, and try to get to here. It's very hard for me to buy the breakout and try to hold it till here. This little dip would have scared me out. It's a bear market. So what I do instead is I've been focused on shorting resistances. And it's been working perfectly. So you guys see here, sorry, I have my level at 37.60. The top tick right here, 37.60, straight down for 7 points. That's all you need. In futures, you catch 5, 6, 7 points. There's a lot of money in there if you know how to size right. Same thing up here. So we got up here. This one failed for me, I believe. The 37.80 one. So I did miss a futures trade. It went right through, caught my stop, and then I shorted right here, and I got it right back with the 5-point gain. All I do basically is, let's go over the trade at the end of the day here. I was waiting for 38.20. I said I would short it straight direct. Usually an A+ setup is in a bear market, you want to short right direct at resistance. This is what's been working for me, okay? This is not a foolproof strategy. It's nothing like that. It's just what's been working for me. And what I've been doing is I short resistance right here. Let's say I took a 38.20 short. Let's say I took 10 contracts for fun. What I'll do is I'll give it like a 2 or 3 point stop. So just in case it wants to like catch some stops, I'll give it a 2 or 3 point stop. So I'm risking 20 points, basically 10 contracts, 2 points a contract. I'm risking 20 points. What I'm looking for is my first sell at 5 for half. If I sell half for 5, you can do the math. My play is almost free right away. After that, I move my stop down to break even. So basically, if my trade goes against me, I lose 20 points. That's fine. Then if I sell for 5 points, I move my stop to break even. That trade is green for me. That trade is done. The rest is all just icing on the cake. If I get stopped out the rest, it's still a green trade. If it keeps going down, it's still a green trade. And basically, that's the strategy that's been working for me. I'll stick to it. I'll sit around all day. I don't care. I'll wait for my resistances. I'll short them. And as you guys seen, a bunch of our members hit SPX puts at the same level, SPY puts at the same level, and a bunch of other stuff. So congrats if you guys nailed those trades. And just an example of what I've been doing. If I say I'm going to short direct at a level, you don't have to trade futures to take that. If it gets to 38.20, set an alert like Dhruv did at the end of the day. Dhruv nailed a SPY play, I believe, or SPXU play at the end of the day there. And completely nailed the play. He set an alert 38.20 ES. It triggered. He got in the equity, which is a short SPY ETF, and he nailed it. That's all you have to do. You don't have to trade ES. You don't have to trade futures. You can trade it in so many other ways. You can short almost anything based on those levels. Other than that, I hope you guys had a good day.